Hey traders, Raghee here, and in this recap video we're going to talk about currency contrast and also what kind of currency pairs you can trade, not necessarily only through the Forex, but through Forex and futures as well. And the reason I bring that up is we're actually long a rather somewhat unusual pair in the Euro versus Canada. Now I say unusual relative to the fact that the Euro US is the #1 traded market on the planet, and it's probably the place that most people look to go long or short Euro. They'll usually do it against the US dollar. The place that we decided to go long Euro was against the Canadian dollar. So this was a trade that we took and set up last week. It was a pretty narrow zone considering the price movement range that this pair can see per day. But we basically were scaling in from about 58.70 to 58.25, even with a 58.10 entry zone. So 60 pips from top to bottom. And again, this is a relatively volatile pair. And so 60 pips within the context of what this pair is capable of isn't really all that wide. Let me show you here. So you'll see this is about 140 pips on the upper end. And on average, we were not even on the map, so to speak. We weren't even on the, if I'm looking at that 60 pips as a function of what this market could do on a Monday, or the lower end of the range, it's pretty narrow. So a reasonable place to scale in without a terrible amount of risk. Again, in perspective of a daily time frame. So today we had a really nice follow through. Now, a couple things. Let me show you this. One, what is contrast? If you are a currency trader, contrast is basically wanting to buy stronger currencies against weaker ones. We are actually doing what? We're buying the euro and we're selling the Canadian dollar. So the contrast, the distance between these two is great, and therefore we have a better shot of seeing the euro versus Canada move higher as we buy this currency and sell this one. And that's what contrast is all about. We also have euro versus Aussie on our list. We've been looking to buy yen. We've been also looking to buy pounds. So our favorite currencies are sitting 1, 2, 3 on this 1 month relative performance scale, which is what I will use mostly for daily time frame entries. So that's number one, why we picked the euro versus Canadian dollar and not the euro versus US dollar. See, very little contrast. They're sitting right next to each other. We want contrast, right? We want, again, contrast. So next up, what if you want to trade some pairs, some currency pairs, but not through the Forex markets? What's your alternative? It's going to be the futures contracts. So if you go to cmegroup.com and click on product groups, they even call it FX, it is Forex futures, you'll notice there are a number of majors, emerging markets, and cross rates that you can trade. And you'll notice that right here, we have the euro versus Canadian dollar. Now, on no planet is the futures of euro versus Canadian dollar going to be anywhere near as large as what's happening in the actual Forex market. So these futures here, while you have an alternative, are much, much smaller and less in participation than the monstrous Forex market. So I'd prefer you go the FX route. But I like to always mention that things like euro pound, euro yen, there are alternatives to going the Forex route. And for every single currency that trades against the US dollar, you're going to find a relatively liquid futures contract to go along with it. So a little bit of insight into currencies, and we do quite a bit of currencies. In fact, we have a dedicated section within Simpler Futures called Simpler Forex for those of you that want to trade currencies. And currencies are a very hand-in-glove fit for the metals, indices, and energies that I like to focus on the futures side. So it really isn't that outside the parameters of what I like to focus on. I think it's a very, what I call one mind, many markets type trade. Now, in the premium video, we're going to review gold. We're going to review some unleaded heating oil. We're going to talk about the Dow and some intraday nuance, as well as, what happened today in the indices. Where have we bounced off of? I'll follow up on the Boeing trade that I took last week. and we'll talk about a number of these markets, most of which we're in trade management of, but I'll talk about some of the intraday nuance and how to handle a market like the Nikkei, the Dow, the SPOOs, and the NAS that just ripped higher from levels that I wouldn't normally think are range extremes. What do you do if the market falls short of your ideal range? And what do you do if the market actually stops at a level that's a little bit more aggressive than further down, say, more conservative Darvis levels? What do you do, and how do you confirm that? I'll get into all that in tonight's premium video.